Hello everyone, this is Matthew Frailey with BreakpointTrades.com. As you know, we've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our 21 SPY and ES mean reversion systems, our new KISS trend following systems. We've been doing this for individual traders and professional institutions. Okay, it's been a while since I been about a week since I posted a video on YouTube. Market has weakened quite a bit since. Time to do another update. This is our back-end recorder for our general website, and it is Thursday, October 19th, 2023. And we're going to go and get this video started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Thursday, October 19th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. By the way, I did not add any trade ideas, guys, new ones. Going to simply go over some recent ideas. And again, as you know, market is not looking good. The Bears have clearly had the football all along. It's been up to the Bulls to intercept it. It's still possible for the market to recover here, but those Bulls got to intercept that football now. Otherwise, what we discussed on the weekend, the leading diagonals, could be playing out. I'll show you those charts again here tonight. Again, we discussed those on the weekend and all week. Obviously, the big news lately has been the 10-year Treasury yield. 10-year rates hit new highs again today, basically at 5%. You're looking at mortgages now at 8%. And that is really spooking the market. Market really needs to see a reprieve from those rising rates and some sort of support on the bonds, because it is really starting to spook things. So again, weakness continues here. The S&P and triple Qs today lost about 0.85%. The Russell IWM lost 1.6%. And boy, that is one ugly sector. And quite honestly, guys, let's be honest, the Russell is much more representative of what is going on under the surface with the average stock. Why? Because it doesn't contain those 7 to 10 stocks that totally skew the weighting of the S&P and Qs, such as Apple and Tesla. And Tesla's been selling off lately, but Microsoft, all those are still holding up pretty well. So without those, the S&P would be down for the year. Think about that. Anyway, also in this environment, as you know, gold has been just on fire. It's rallied 150 points over the last 10 trading days. Not surprising. Again, guys, what has always concerned Steve and I is all this debt upon debt. I know that President Biden tonight's going to address the nation. I know he wants to ask Congress for yet another $100 billion. And again, regardless if you're a Democrat or Republican, you cannot keep spending like absolute drunken sailors and not have problems. Unfathomable, but it is what it is. But let's go ahead and move on and take a look at things. So first off, item number 2 below shows the index sector table, what transpired today and this week. So you can see strong down day, broad-based sell-off, S&P, Nasdaq down about 0.85, 0.9%, with the Russell leading down. For the week, also today, all 21 market sectors that we follow were down. So it was a very broad-based sell-off, as you can see. Nothing closed up. Okay, and you can see the weekly indexes are down nicely for the weekly. Most sectors are down for the week except energy. Currencies, now the US dollar has been pulling back, but that's not really what's spooking the market here. It's the rate moves in rates. The 10-year, 30-year, another new high today, etc. Now, what has been really moving are the precious metals, gold, silver. Now, gold is outperforming the stocks here in the short term. So keep an eye on that. That area may be getting a bit stretched, but again, it's going to react to whatever geopolitical and things happen. So that definitely folks run into safety there. But I do think long term, I'm super bullish on gold. I wouldn't be surprised if it goes to $3,000 an ounce eventually. Okay. Commodities here, almost all to the upside except natural gas. not helping things. And crypto were up today. Next, item number 3 shows the economic news calendar. Tomorrow we have Treasury budget, and again, any earnings that are come out, we've already started seeing weakness in earnings. I know the consumer is finally starting to get tapped out. Huge debt, credit cards are at maximum, the highest they've ever been. And of course, again, we have to, anything geopolitical out of Israel, what happens there? It's a powder keg in the Mid East. So that's another thing spooking the market. All right, let's go and jump to the charts. So the first charts normally I start these later in the newsletter, but because these are front and center, let's talk about these rates. So here's the 10-year Treasury yield. This is the daily chart. And you can see new high today, closed right around this 5% area. Okay. And you can see here, I added a parabolic or parabola trend line. Prices are starting to go in kind of a parabolic fashion. Okay. And there is some RSI divergence here. Let's hope that that can produce some sort of high in rates. But remember, divergence is not negative divergence is not a sell signal. This could be negated if rates continue just to skyrocket up. The RSI could take out its high there and negate that divergence. But it is there for now. There is a little bit also on the MACD, but boy, oh boy. Next. Jobber 10, here's the weekly view. Again, remember we showed this weeks ago, this resistance. We broke out of it, and rates have just been pushing up strongly since. Next. Jobber 6, here's a monthly long-term view. This is a 40, 41, 42-year chart. As you know, back in the early 80s, rates were crazy high. I think mortgage rates hit 15, 16% at one point. At that point, right now, by the way, mortgage rates are 8%, guys. 8%. Anyway, interest rates, Treasury yields were in a 40-year secular bear market. They ended that secular bear market. They confirmed it last year by breaking this channel on this monthly chart. I had this chart drawn for many years. We finally broke this last year. Anyway, big rally up the last couple months. We're now into this area, which was my next resistance area, right around this 5 to 5.25%. This is a little supply zone. Let's hope that rates start to stall up in this area and then pull back. If they were just to keep going, things could get real ugly. But let's hope they pull back in this area. Again, guys, don't get me wrong. Even if the rates pull back here, long term, rates are now in a secular bull market. Okay, but let's see. Again, what the bulls need is for rates to kind of start stalling in this area if we're going to have any end-of-year rally. Next. Jobber 7, here's TLT 20-year bonds. Remember, they move opposite of rates. Again, same thing. Bonds have been melting down. In fact, they're moving down in a parabolic curve. Again, there is some MACD divergence, some RSI divergence, but until we see a trigger, a decent reversal signal, the trend is down. Again, the hope here is it is getting parabolic. That's usually unsustainable in the short term. Look at the pickup in volume here. Volume's really picking up on the downside. That is possibly some capitulatory bottom action that could, be occurring right before a trade low here. Let's hope that is. And we'll see. Next. Image number 8. Here's high yield corporate bonds versus the S&P. So the problem with the market, guys, the market generally follows high yield corporate bonds. Just look at these two charts. Notice how they really mirror each other. But high yield corporate has been weaker than the S&P. So is that going to pull the S&P down? That's a real possibility. Chart 9, here's a daily view. Again, this is the problem. Bonds have been these high yield corporate have been so much weaker. And you can see big sell-off. They took out those recent lows. The S&P is not. So is it going to drag the S&P down? Chart 10, here's a 60-minute view. I posted this the other day. This is the S&P 500 up here. This is high yield corporate. And you can see these divergences. The S&P made a slight higher high, as you can see there, early in the week. And then high yield corporate made a lower high. So that was bearish because, again, high yield corporate tends to lead, and lo and behold, Now it's pulling the S&P down. Next, moving on to the indexes. Here's the daily snapshot of the 5 key major indexes. So again, down she goes. And you can see the lower Bollinger Bands below. We'll see where these go. Boy, the Russell at the bottom has just been absolute destroyed. It's now slightly below its lower Bollinger Bands. Next, image number 12. Here's a daily view of SPY. Again, as you know, it stalled in that little open gap. It never filled that open gap. It got into it a little bit near that 50-day declining moving average. And now it's back below that trend line. Now you have the 200-day moving average. You guys, remember the 200-day moving average here? Remember how price got close to it, but it didn't tag it? And that always bothered Steve and I because it was so close. When you get so close to a major area, normally you test it. So that was always bothering me in the back of my mind. And well, maybe that's why. Price is coming down. Maybe now we undercut the 200-day moving average. So we'll see. Chapter 13, here's SPY. Again, just shows you a closer view of the S&P, how it got into that gap area. Actually, the SPY looks like it filled that gap. And then down she goes. Remember, we didn't quite hit its 200-day moving average last time, which was, to me, always a problem. And maybe it's destined to this point. Here's that leading diagonal we've been talking about. So under the leading diagonal, we discussed on the weekend, the other option is we sell all the way to a new low here before we get some sort of end-of-year bounce. That's a very real option. Wave 1, 2, 3, 4, 5. Okay. Unless bulls can reverse right here, make a higher low, this could be the option that is unfolding. Next, chapter 14. Here's the 2-hour view of the S&P. Again, this is this leading diagonal. You can see 1, 2, 3, 4, 5. You know, the sell-off lately is giving more credence for the bears here. Again, the bears clearly have the football. Again, we still could technically form a higher low here. You have some support right in here. We'll see if that can hold or not. But onus is on the bulls, guys. Although if we don't soon bounce for a higher low, then I favor this leading diagonal down to the lower trend line. Chapter 15, here's the S&P KISS system. Now, I've got a couple things to discuss on this, guys. So on the KISS trend systems, so first off, the KISS tables are still in beta, right? We are planning a major update to them. In fact, I'm going to add a premium section that'll be a separate charge, but it's going to be high-powered KISS systems in that table. But also, there's been some confusion lately where, you know, this S&P KISS chart showed a long entry there a couple weeks ago, but the KISS tables did not. So I found the bug. I have a different setting on my charts than or what in the KISS tables. That's the difference. That's why there was no email for this entry. But so I've now corrected that. But otherwise, on this version that went long here, you know, if you were following this, you would have hit that stop up there around that 4,300 area. Okay, so you'd be out anyway. S&P stopped right at that ATR, which was big resistance, and of course 50-day moving average. Next, chapter 16. Here's another daily view of the same thing. This is the same settings that's in the KISS tables, so you can see this one never went long. Okay, which actually now seems like the proper thing. By the way, this has slightly better stats than the one I just showed you. So the one in the KISS section that did not go long is better. So if you've been following that, you know, you picked the right one. Next, chapter 17, here's the 4 time frames we follow. Again, you can see the S&P upper left here, how price stalled perfectly at that ATR, just perfectly. Sold off, couldn't hold that support cycle. Moving average ribbon was pinching bearishly. And the half day, we're right on this ATR. Notice, see the little cyan dot? That's a support cycle. Again, we need to bounce right from here if we're going to get it. Got a DeMark 9 on the 78 minutes. So again, it's still possible we can form a higher low, but The bulls really got to start taking charge here right away. Otherwise, I think that leading diagonal plays out. Chart 18, here's 2-hour view with some fibs. Again, that open gap you can see there. We've retraced quite a bit of this. There is some support down in here. Onus is on the bulls to form that higher low in this area if it's going to happen. Chart 19, 60-minute view of fibs. We are slightly below the 61.8 fib. For a higher low, I would have liked to see that 61.8 fib hold. Again, it doesn't have to. You can get down lower, but again, onus is on the bulls. Chart 20, 30-minute view that Steve's been showing. Moving on, chart 21, here's the triple Qs. Again, triple Qs stalled at the downtrend channel line. That was a great short. Also in that supply zone. Again, I think a lot of you are understanding supply zone and demand zones now, but they're formed when you have a couple up and down candles or dojis, and that was just perfect. The Q's much stronger than the S&P, primarily because of those huge weighted stocks. The big question is, do they need to be taken to the woodshed and for the Q's to really sell off and play catch up? We'll see. Chart 22, here's the triple Q's KISS system. Again, it never did go long there, so no confusion. KISS system for the Q's have done well this year. It took a nice long there in January to February, another one from March to early August. Then you had a little whipsaw, and it's been flat ever since. Chart 23, here's the daily Q's leading diagonal. So this is the other one we discussed on the weekend. So under this case, we get a move down to another low here, probably the 200-day moving average. So again, the action in the markets this week are more favoring this at the moment. Again, we could still form a higher low, but bulls have really got to intercept that football. Chart 24, here's those 4 time frames. Again, here's the daily Qs at the top left. You can see how that resistance cycle capped price and pulling back nicely. We do have the ATR below. It forms a slightly higher low from that last low where you see the mark 9. We'll see if we can do that or not. Again, price weakening here quite a bit. Chart 25, here's 195-minute half-day chart. Just stalled at the trend line there. There's still this big open gap down there that if that leading diagonal plays out, that could be a magnet too over time. Those gaps like to be filled. Chart 26, here's a 60-minute view. You can see we broke down from that triangle pattern. We're right around that 61.8 fib. That's the area where you want to see bulls start to defend it. Next. Chart 27, 15-minute view. I meant to remove this, so let's move on. Chart 28, IWM, Russell 2000. Boy, oh boy. Now, you can see that head and shoulder pattern. That has clearly played out. And we're below this trend line again. I mean, ugly, ugly. The Russell is much more representative of what's going on with the average stock in the market because it doesn't contain those weighted stocks like Apple and Microsoft and Meta and all that stuff. So this is much more representative of the carnage that's been occurring under the surface. Chart 29, IWM 2-hour view. Again, you can see it rallied into that supply zone, stalled there, boom, and it took out the last support. Looks ugly. Moving on to look at a few indicators. Chart 30, here's the VIX and the VVIX. They both closed strongly outside their upper Bollinger Bands. Remember, I talked about, hopefully Steve mentioned this the last couple of days, the Bollinger Bands were pinching. Well, now they resulted in a release to the upside. Okay, so fear is starting to build here. Keep an eye on these with it outside the bands. Again, a close back inside the bands would be a buy signal for the market. But the VIX could also, the market really wants to sell off here. The VIX could run up and stay above the bands for a while. But it is something to watch at the moment since they are outside the bands. Chart 31, here's the VIX itself, just by itself. Chart 32, Here's the NYSI 9 EMA crossover system. Now, the 9 EMA crossed over, or the NYSI crossed over the 9 EMA just slightly on Monday, but you can see price has been selling off. Now, so is that a whipsaw, or another idea here, guys, is to use a trigger candle confirmation. So here's how this works. So whenever this crossed up, whenever the NYSA crossed up over the 9 EMA, which was right here, you basically draw a line over the high, and you need to see price take out that high for a confirmation. You can see that never happened. In fact, price sold right off of it. Okay. Just like here, when the NYSI crossed below the 9 EMA, you wanted to see price take out the low of that candle, which it did in a couple days. So the confirming candle will sometime get you in a little bit later, but it will filter out a lot of whipsaws. So that's something to keep in mind. Moving on, chart 33, here's the sectors chart. I'm not going to look at a bunch of sectors tonight. Again, things have been super weak. Again, what's been strong is the energy area. Look at XLE, crude oil, but all these other sectors look like death. Chart 34, here's the transport. Steve highlighted this last night. You can see it's breaking down here. Now there is a little MACD divergence. We'll see if that can offer some, a reversal, but right now looks weak, breaking down. A subsector of transports is the airlines, the Jets ETF, and just look at this thing. Just unbelievably tight channel going back to the bottom of the channel. This just absolute horrid. Again, don't try to catch a falling knife here, guys. You need some sort of good reversal candle and trigger, but really illustrates the carnage here. Moving on to commodities, chart 36, DBC up 1% today. Nice recovery from that 200-day moving average. Chart 37, DBC on the monthly. I haven't shown this for a while. Again, long term, guys, commodities are in a bull market. The monthly chart here, as I've shown many times before, looks like simple ABC pullback in the first leg of a bull market. So I think this eventually makes new all-time highs. And so the point is, inflation is here to stay. Chart 38, crude oil. Now, crude oil has been bouncing back, but this could form a lower high perhaps. It kind of has a bear flag look. I added fibs here. You can see the 61.8 fib, 89.90. We haven't made it there. Unless we bust up through that, this could form a higher low perhaps. Chart 39, copper. Super weak. It's a big support area here. It's been trying to hold that. The economy goes into recession. I think copper breaks down. Chart 40, DBA. This has been moving up nicely with commodities. And chart 41, here's the 60-minute view. Again, beautiful example of symmetry in action. You got a downtrend here. This was the largest bounce in that downtrend. Then in here, early October, you had a bounce larger than this, so you broke symmetry. Whenever you break symmetry, odds favor a higher low, which we got here, and we've been moving up nicely. There's an open gap up here that could be the next target. Chart 42, uranium, nice bounce. Remember, I've said an ABC ABC can unfold in a zigzag where C is lower than A, or you form a coil that becomes a 5-wave pattern. Right now, there's a small coil here setting up. Big pickup in volume here. This is starting to look more interesting now since it's starting to consolidate into a coil. I like this chart long term. I don't have the monthly chart in here tonight, but remember, the monthly chart is super bullish. I think this goes way into the upper 30s eventually. Moving on, chart 43, here's a Bitcoin up slightly today. I'm not going to make other comments here. Steve added what could be a little head and shoulder high, but short term it's still moving up. Chart 44, Coinbase. Steve showed it last night. Right now it's forming this coil. It's getting close to busting down, something to watch. Chart 45, US dollar. Now the dollar did pull back today, but that didn't help the markets because the real focus was on the bonds and interest rates. Moving to precious metals, chart number 46, gold. Another good rally. Hell of a rally over the last 10 days, as you can see. I mean, 150 points it's moved off those lows. This ABC that I drew, a couple months ago appears to be probably the pattern. Hopefully some of you bought that, or some of you may have bought the broken downtrend line here. It is maybe getting a little extended, but long term, I'm very, very bullish on gold. On a pullback, I like to see this broken trend line act as support. In the very short term, the stocks are starting to... So first off, the stocks outperformed on this move up, as you can see on the ratio. Now, over the last couple of days, gold has been outperforming, so the ratio is dipping. So maybe that's an early sign that gold could pull back a little bit for us. Because if you're not in a position here, you definitely want to see a pullback so that you can get into it. Looking at the bigger picture, chart number 47, here's the weekly view of gold. Again, perfect bounce off this 200-week moving average, which is always an important level. You can see the three-wave ABC. Here you got this resistance area has been tagged 3 times. Again, I think eventually gold busts out of this hard and we see gold go well into the 2000s, 3000 area. Next, chart number 48, here's the monthly view of gold. So bullish view is you have a big cup and handle, and this whole 2-year consolidation was a big wave 4 ABC, and we're now, this move could be starting wave 3. Remember, an Elliott wave 3 is your strongest move. If that's the case, that will take us well into the 2000s. So you'd have a 3, then a 4, then a 5. By the time that's done, maybe you can be up at $3,000. Chart number 49, silver, nice recovery. Right in the middle of this pattern now. Chart number 50, here's the bigger picture view. You can see this big coil-like pattern on this monthly chart going back 12 years. And of course, this bigger downtrend line. Silver breaks out of this, then maybe silver starts having a huge run. Next, chart number 51, GDX. Again, nice rally here into the supply zone where it's been stalling a bit. The broken downtrend is now support, as well as the 9 EMA. Chart number 52, here's the 60-minute view of GDX. Again, GDX, hell of a rally from that falling wedge, 5th wave low. Wave 1, 2, 3, 4, 5. It was just a beautiful low there. Look at that. And you had MACD divergence. So we've rallied all the way to the supply zone, pulling back a little bit. Now, we do have a little symmetry break here in the short term. This pullback is deeper than this one. So some odds that we can form a little higher low here. But either way, a pullback would be a buying opportunity. Next, I've been showing my custom KISS system for GDX. For the KISS system, I've been running a 78-minute chart. 78-minute, there's 5 bars in a day, in case you didn't know that. Why am I using that? Because GDX is very whippy on the daily. It doesn't trend for long periods of time, most of the time. So the KISS systems don't do great on daily, but they do great on the 78-minute. So the 78-minute went long on January 6th. By the way, this is an example of one of those systems that I'm going to put in the custom KISS section. Okay, this and a few others. But it went long here. Excellent entry, just off the lows. And you can see the current stop, smart trailing stops, 28.90 in case you wanted a tight stop or something. But eventually this will be on the website, guys, so you can get email alerts to it. Chart number 54, here's the stats. Now these are from a couple days ago. They don't include the moves the last couple days, but take a look at GDX KISS system 78-minute versus GDX buy and hold. It's not even a comparison. So this year it'd be up 32.5%. GDX buy and hold would be up 2.6%. Again, that's from a couple days ago, but it's going to be commensurate. Maybe this is now 34% and that's 5%, but huge difference. 18% last year, 18.8% it made, whereas buy and hold lost 9%. So huge differences here. And if you look at the totals, the 78-minute KISS system makes almost 5 times what buy and hold made. All right. But the main difference also is the lack of drawdown. Look at the small drawdowns generally. And look at the huge drawdowns on buy and hold. I see 50, 60 percentages in here, 48%, 49%. Those are huge drawdowns, guys. So then when you look at the KISS system, very, so much lower. Basically 5 to 7 fold lower drawdowns. So that's an example of one of those custom KISS systems. Next, let's look at some stocks. Chart 55, here's Tesla. I've had it on the list. This was one of the ways to this coil pattern, A, B, C, D, E. So it was a bearish triangle with E labeled up there, and it broke down on earnings. So yesterday it broke. Before the close, you could have shorted it if you're in a big gap down today. Looks ugly. What is also going to hurt Tesla? Interest rates. Think about it, guys. Most people don't buy a car with cash, and Teslas are expensive. Most people finance. Well, go look at your car loans these days. 8% or 10%, 12%. Just crazy. So, and they're a luxury item. So Tesla's going to hurt when the economy tanks. Chart 56, CAH. This is a long idea of mine a couple weeks ago. It hit its target. Hope you took your profits there. Now starting to pull back. Chart 57, here's some of those bellwether stocks that skew the indexes like the S&P and Qs, AVGO. Still holding up very well here. The question is, are these going to start to really weaken? This is still very strong at the moment. Chart 58, Apple, still hanging in there. But if you start seeing some of these big stocks really weaken, then the market would be in trouble. Chart 59, GWRE, it's been on the list, still in a coil here, looking more like a short if we break this triangle. And final chart, chart 60, here's NVIDIA. The scary thing on here on NVIDIA here is you got basically a rounded umbrella top look. Head and shoulder umbrella top. You see that? Head and shoulder and an umbrella rounded top. All right. Price stalled at around that 61.8 fib last time. Pulling back. If this were to break this support, then the measured move, which is the height of this pattern, would be down around here, around 300. What do you think the market would do if that happened? Another target, of course, would be around the 200-day moving average. So if this breaks down, this could be the target on NVIDIA, and that market would not like that. Anyway, guys, we'll see what happens tomorrow. By the way, Friday is options expiration, OPEX. Sometimes you get reversals after that, or at least a lot of volatility. So we'll see what happens tomorrow, and thanks for all your support. Have a great evening, and of course, a good Friday and a good weekend. Take care.